Welcome back, everybody. We have another awesome episode of the Wisconsin Investor, and I know it's awesome because this is all pre-recorded. So I'm doing this. No, I'm just kidding. I just know Mason and I are going to on a riff today on a little new topic that some of you guys maybe haven't had us on here talking about today. We're going to get into some commercial real estate investing conversations. If you're not into commercial real estate investing right now, but you're interested in maybe someday getting there, hang on. If you think, man, I'm never going to be able to get into that space, I'd still encourage you to hang on because I know Mason's got a ton of great knowledge that he's going to be able to drop here, not just on commercial real estate. The guy's also involved in other businesses, and there's going to be a lot to unpack here today. So with me today, guys, I've got Mason Clark. He is the Chief Investment Officer of Park Place Holdings. This is where he leads commercial real estate and the operating company investment strategy. So he's overseeing acquisitions, dispositions, underwriting, capital structuring, portfolio performance all across. They keep adding deals all the time, and a lot of focus on the value add opportunities, which is the area I like to play in real estate as well. And they're focused mostly in office, retail, some development and redevelopments. Mason, you've been in this 7 years plus now? Is that right? Yeah.
Going
And
on 8.
yeah, and check this out, guys. They have built at Park Place Holdings assets worth well over 9 figures. That's like a lot of money. That's like pretty big. That's a big number, dude. So that's pretty awesome. I don't know that I've had anybody on yet that's playing in the 9-figure game. So I'm pretty excited to have, unpack that a lot. But you guys have done it. It sounds like from, you guys have a system. It sounds like you follow. You've got some creative deal structures. You guys are pretty hands-on, and then you're involved in other your operating businesses and owning businesses. So I'm excited to unpack all of this today, Mason. And we got a couple deals we'll break down here today as well. But man, tell us, that's a lot. We just uncovered a lot of stuff here, man. How did you go from what we just unpacked there? Like, what were you doing before the 7 years ago, Mark? And you got hooked up with Park Place.
Yeah, so just kind of a quick recap. So prior to joining Caleb, I was a financial advisor. So I was doing that for a couple of years. I did it for a couple of years actually in college, more of an insurance agent in college. But from there, was in lacrosse. Business was growing up here in Appleton. So I decided to partner with a firm up in Appleton. And then from there, one of my clients had introduced me to Caleb, Hope Graff, and she sold us our house up here actually, and just thought we had very similar energies and synergies. And so she put us in a room together, and the rest is kind of history, I guess.
Man, so it only takes that one connection to completely change your life, huh?
Yeah. So I was approaching that intro more on the financial advising side, and then it just kind of transformed. I'd always been interested in real estate and was kind of evaluating deals and trying to get into my first deal at the time, and thought he could possibly be a money partner too, and took a little bit different turn than I originally thought, and ended up working out. So
that's amazing, guys. So for those of you guys that don't know, Caleb Hayes is who Mason's talking about. And Caleb owns, and how I met Caleb was he owned the Keller Williams brokerages in Green Bay and Appleton when I met him. And man, he was one of our first mentors. Like, I still reach out to him every once in a while, which is gratitude, because he just selflessly mentored my wife and I in real estate and got us really started and running a business, not just investment, just doing investments. He really taught us some principles of how to run a business, and forever grateful for that, man. But tell me a little bit. Now he's obviously, you guys are running this 9-figure business. He's gone from he was doing, like, at the time, I remember he was like one of the biggest dudes in flips. This is like 2016, 2017. Yep. I remember he was like doing like 40 flips a year. And I was like, oh my gosh, how is he doing this?
I think I wasn't involved on the flip side, but I think at the most they were doing 50 to 60 at one point. So yeah, it ballooned pretty good. And then I think just kind of throughout my time there, we constantly review the business, what's working, what's not working, what makes sense to continue working on. And that just kind of was one of those things where we analyzed the profitability of it and where the cash was going, and realized commercial was just the direction we wanted to take the company. And so we eventually phased out flipping as a whole, probably in 2019.
Okay.
2018, 2019, somewhere in there. A little after I joined, we ended up phasing it out. So
yeah. took all of that knowledge and project management skills and everything else and just added a
Hmm.
couple zeros to the back end of what you guys are doing, huh?
Right. Yep. Yep.
That's awesome,
Exactly.
man. Take me back to that conversation you and Caleb had because I'm interested in this because what's interesting about you, Mason, is Caleb owns the overall the Park Place, right? And you're
Yep.
now your partners or however you guys have the structure, but at the time
Yep.
he owns this entity. You come to him as a financial advisor, right? Who also
Hmm.
enjoys real estate. What I think is great about this is there's a lot of people that listen to this that maybe don't want to be the guy to like carry that load of owning the everything and have to be the the CEO so to speak, but they want to
Hmm.
be in this game. They still love real estate and everything else. How was that conversation? How did Caleb pitch this to you back then to kind of paint this vision of what it is now, and what was that
Hmm.
conversation like back then?
Yeah. When we first met, it wasn't really a pitch either way. It just kind of transformed into it. So I had kind of like I said, I was wanting to break into real estate, and we had done personally a couple live-in flips, I'll call them.
Okay.
And so I knew I wanted to get into a little bit more long-term hold, but I, didn't really know what I was doing. And so, uh, yeah, basically conversation similar to what you said is he was open to kind of talking, being a mentor, and we always joke about it because uh, I'm an early riser, and so he always jokes that I kept bothering him at 3, 4 a.m. sending him stuff, and he said at that point he kind of knew that he wanted me to be a part of the team, and so then it transformed into having that type of conversation. And yeah, I mean, he paints a very good picture of where he wants to take the company, and at the time we really didn't. They had owned a couple commercial buildings,
Okay.
pretty much the Keller Williams offices, and I think one or two buildings outside of that. And so we didn't really have a specific direction on the commercial real estate side and where that was going to go. And so he was taking
Mhm.
a little bit of risk on me coming in and helping him grow it.
Yeah.
So yeah, since then we just kind of worked side by side and doing our best to take it to the next level.
Awesome, man. So, did you come in with the intention to grow the commercial side of things, or was it just bring this guy in on the team because I think he jives well and culturally he's a great fit, or what was the intention with when you got hired? What was that looking like?
Yeah, it was a new position. So I think it was just commercial asset manager. I think my original title was. So yeah, basically come in, try to help lead acquisitions, grow the company, and at the same time I was doing leasing and property management, and so kind of the whole thing for from start to finish with buying a property.
Okay.
And so yeah, that's how it started. And since then we've changed it up a little bit, but yeah.
Still kind of the majority of what you're still kind of doing the same gig.
Yeah, I don't have as much hands on with the leasing side.
Okay.
Um, Outside of the financial, we'll analyze some of the details of it. But we have a leasing agent in house. Lauren Leroy is on our team, and operationally, Annie Schoenwalder handles most everything on the operation side for the management, and Beth Phillips operationally as well. And then we have
Awesome.
Amy Tess in house for accounting. So that's the extent of our team. We have a
Wow.
um, couple people who help with acquisitions, kind of on the side as well. But
Okay.
yeah, other than that, that's how it's transformed. And so I kind of oversee just most of it now, rather than
Okay.
being too hands on day to day with it. But
Awesome. So if you were to start out today, Mason, let's talk about this because people think about commercial and I think it's scary, right? It's a scary world.
mm-hmm.
It's an unknown. I don't know why it's even in my brain. I have like limiting beliefs or like roadblocks and mentally of like, oh
Mm-hmm.
man, getting a commercial property. I don't know about that, but I can do a multifamily. I know how to
Yeah.
underwrite that. I know how to do that. When you're looking at a property, like if you were starting out brand new, you and Caleb weren't connected. It was just going to be Mason and his family starting out this commercial stuff. Like, what would you do starting out? Like, how would you do that? How would you learn how to underwrite these, how to look at the risks, the rewards? Like,
Mm-hmm.
kind of give me a little lay of the land in brief of day one for somebody out here listening to this that's like, yeah, the commercial thing sounds kind of cool.
Yeah. That's a tough question. I mean, commercial is a lot different than residential. I mean, the biggest thing that people get a little turned off by is just how fast or how long I should say it takes to find a tenant. right? Because residential, everyone needs a place to live. So
Right.
as long as you have a decent house and somewhere for someone to stay, like you should be able to find a renter,
Mhm.
you know. And so commercial is a little different, where you can have vacancies for 2 weeks, or you can have them for 24 months.
Mm.
So yeah, underwriting plays a big role in how you do that. Um, a big part of it, just like with residential though, is like as long as you're accounting for vacancy and kind of setting money aside to prepare for those times, it makes it a lot easier. But yeah, as far as underwriting goes, a big part of what we look for is just location. So you want to have a property that's in a good location that people want to be. So we've had deals where location isn't great and we're feeling it, where we can't find a tenant to put in there. So yeah, location plays a huge role. And then anything on the main corridor, like if you can get something relatively inexpensive now that's on like College Ave in Appleton, or
Mhm.
Oneida Street in Green Bay, like if you can get something relatively cheap and it can be redeveloped in the future, like those are game changer properties on the commercial side.
Okay.
So yeah, location's huge. And then when you're underwriting, if you have current tenants, you need to make sure that lease rates are within the market. Because if you have someone that's paying, say, $20 a square foot and market rates are $15 a square foot, you're more than likely either going to have someone ask you for a rent reduction in a couple of years whenever the lease comes due, or you have to take it back to market. You're going to be losing money
Yeah.
from that point too. So yeah, there's a lot to unpack with commercials. So it
Yeah.
comes down to just finding someone, being a mentor, kind of like we
Yeah.
already talked about with Caleb, and he's helped you out a little
Uh,
on your businesses and stuff, and just
yeah.
finding someone that has that experience. Because we could probably talk about underwriting a deal for a couple hours and everything that goes into it and what we look for, but I know
Yeah.
we don't have quite that much time.
No, but we could keep going with it a little bit because I think one of
Mm-hmm.
the things you mentioned was location, right? So
Mm-hmm.
what are the factors for location that you're seeing are going to make or break a commercial property?
It depends on the asset class too, right? So when we're looking at redevelopments, a lot of times we're looking for specific clients or specific tenants. So a lot of the quick serve restaurants we've developed, Freddy's Frozen Custards and Cousins Subs and Scooter's Coffee, Caribou Coffee. And so those types of tenants typically have specific requirements that they need. So vehicles
Okay.
per day on the road, so they need to see a certain amount of traffic count. Some of them like hard corners on stoplights, and so they kind of have their own buy box essentially for us to look for. But if you're looking at like retail, that's you want to have just good traffic flow and a good mix of tenants for them to feed off of each other.
Okay.
So yeah, it just comes down to, you don't want to be, you know, not necessarily downtown Green Bay, but you don't want to like a retail building within a bunch of residential houses
Yeah.
typically.
Yeah.
So yeah, we look a lot at traffic counts, make sure it's not traffic counts aren't going down year over year, and because a lot of times, like in De Pere, if they're changing traffic patterns with the bridge there, that impacts the value of real estate because you have less people going by certain areas.
Okay.
So it's just, we try to make sure we're paying attention to traffic patterns and what that looks like, because people want to be seen when you're renting space.
Right.
So
That's interesting, man. So where do you like? If I'm so ignorant in this space, Mason, this is. I think I love this because I'm going to learn so much today, and hopefully the audience does too. Because I just am like I am kind of dumb in this space. Where would someone go find traffic counts? Like how do you get that information?
yeah, it's right on the DOT's website. So
Okay.
Wisconsin DOT, you can go right on there and you can pull up the map, search your specific address, and it'll pull up the traffic counts for any street that you can think of. So
Wow. And you can go back, just
mhm,
go, okay, we're going to go back to 2025, twenty twenty
mhm,
four, and see what it did.
yep,
Cool.
yep,
Awesome, man. Wow. That's really good. So that's the main thing. Now, when you said redevelopments, I've always been interested in this when I see like, in Bellevue, for those of you around the Green Bay area, a lot of development going on there, right? By Costco, and you've got a lot of the quick serve stuff, the Culver's and all that sort of stuff. So how does
yeah.
this work? Do you go buy a lot and then you go pitch it to a place like Culver's, or do they approach somebody like you and say, "Hey man, we want a location in this area, go get us something and build it and we'll lease it from you?" Or like what is that? Well, what are the dynamics of that and how does that
Mhm.
typically go?
Yeah, we have different relationships with a lot of different clients like that. So some of them that we have long-standing relationships with will say, "Hey, we're looking in this town or this city, we need XYZ for requirements for corporate to approve it. And so then we'll go out and try and look for that.
Okay.
Other times if we stumble across something that we feel might be a fit for one of them, we'll send it off to them just directly before. We try to get it under contract just to play kind of on the safe side before pitching it. But
Sure.
yeah, so we'll sometimes get land under contract and then pitch it. Otherwise, we have pretty good relationships where we can just send addresses and stuff and they'll review it and give a quick yes or no. So
Cool. So did you say you guys did one for Culver's?
not Culver's, Freddy's, frozen
Freddy's.
custard.
Sorry.
Yeah,
Sorry. Sorry for my Freddy's
very
fans
similar.
out there. Sorry,
Yeah,
Freddy's
very
fans. Didn't mean
similar.
to mix those up. So let me use this as an example. So in this case, did Freddy's approach you guys, or did you find the land and then approach them, or how did this one go down?
Yeah, we originally approached them
Okay.
for our first one with them. Yeah, so it was the old Pizza Hut on College Ave in Appleton. That's the first one that we did for them.
Okay.
So we tore most of the building down, kept some of the footprint, but pretty much tore the whole thing down and built it brand new for them. So
Wow. So they give you, I'm guessing they give you the specs and say, this
Yep.
is what we want build. And then you guys basically GC that for them. Is that how that works?
correct. Yep. So we have Ben Witt from Witt Construction kind of
Okay.
in-house. He does some third-party stuff as well, but he's basically our general contractor that handles, and he's awesome. Does a great job. Like, since we brought that back in-house versus doing third-party, and we've saved millions of dollars on construction and build-outs and compared to what we were doing before. So that's been a huge change in our process.
That's awesome. Well, that makes you a lot more competitive, I'm sure, compared to some of the other
Yeah.
guys out there too, then, that aren't doing that. So that's awesome, man.
Yep.
So you build it now. You're making a spread on that construction cost, or are you leasing it back to Freddy's then after, and you're the one keeping the note or whatever it is on the construction in the building?
Yep. So we have the debt, and they lease the building from us. Typically triple net. So we'll pay basically taxes, insurance, and then they reimburse it through CAM payments, common area maintenance payments. We did one recently in Oshkosh. We actually just sold it 2 days ago. We closed on it.
Oh, nice! Congrats.
So we sold that. Yeah, thank you. And that one was more of an absolute net lease where they're paying all expenses directly to the municipality for taxes, they're carrying insurance, which makes it a lot easier for the owner of the property. But
nice. So then, with these, how long of leases are these guys like a Freddy's? How long are they signing for? And I imagine there's annual increases. And how's all that structured typically?
Yeah, it all varies. I mean, if you get a corporate user, they're typically a little more firm on the terms that they have to see. But a lot of the times when you're working with franchisees, there's some flexibility. So Freddy's, I would say they're typically about 15-year terms. And,
okay.
We've had it with them before where we've done annual increases, or a lot of times it's common for it to be like a 5-year fixed, and then year 6 you have an increase, and then 5 years fixed, and then year 6 is 11 is an increase. So that's pretty typical. But yeah, each time it varies a little bit. It can be anywhere from 10 to 20, sometimes up to 25 years I've seen. So
okay, what are you guys seeing for numbers on these? Cash on cash returns or cash flow, or what is that? What does that typically look like for what your targets are when you guys are looking at doing one of these?
Yeah, so redevelopments are a little bit different. We typically don't go into them planning to hold them. So we kind of plan worst case scenario where it's like it's going to cash flow for us, but it typically doesn't meet our long-term hold returns that we want to see.
Okay.
So more often than not, we have a couple still in our portfolio. We have the Cousins and Scooters in Appleton that we're still holding. But like the Freddy's that we just sold, I mean, they generally cash flow $2,000, $3,000, $4,000 a month for us. And what we look at is basically what profit we can create from it, and then how long it takes us to generate that through cash flow. And if we feel like it's more advantageous for us to take the profit and roll it into a long-term hold that's going to pay us more, that's kind of how we make our decisions.
Got it. So this is your new flip now. You guys, instead of doing the old single family house. You're just
Pretty
building
much,
you're
yeah.
building new commercial properties and then flipping that to somebody like
Hmm.
I would imagine some kind of fund or something like that is buying these up, insurance companies or something else.
Yep. Yeah. Yeah, pretty much.
Cool.
So now you're basically, instead of doing a couple houses and taking 30, 40, 50,000 in profit, you're 10 timesing that on one deal. So you make it a little bit easier.
Nice. That's awesome.
Mm.
So how many of these will you guys do in a year and like what's this, start to finish of a process like that? What's the timeline? Because again, you could do a house in say 8 weeks. I
Mm.
I imagine this process is bigger spreads, but much longer process. So what is that timeline typically
Right.
looking like for you?
It varies again. I mean, by the time you get someone to say yes to a site, I mean, you need 30 to 60 days to close on it if you don't have it. And then from there, construction can be, with getting plans approved from the state, it can be anywhere from 6 months is pretty quick, but 9 to 12 months we typically try to plan for the construction and completion and delivery phase. So yeah, I mean, you before you can really finish it and sell it, you're probably 12 to 18 months in by the time you
Okay,
sell it and close on the sale of it. But
cool.
I mean, we try to do a couple a year, but the market varies. So I
Sure.
think the most in any given year we've done is 5.
Okay. Good.
And so, yeah, it just depends. But
Awesome. Nice, man. Oh, that's cool. I have never understood that whole world. I see all this stuff going up and I'm like, how is this working? Are this Culver's buying this building or somebody else
mhm,
building it and they're just leasing it back?
yeah,
I've always been interested in that. Well,
yeah,
so that's great. Talk about like, so that is kind of more of the generating cash play for you guys, right?
correct. Yep.
Talk about what's the long-term buy and hold strategy for you guys? What does that look like?
Yeah. So we, some people like to focus on cap rates and some people don't. We do because it gives us a general idea of what to expect for cash flow for a property. Because we have our typical financing structure that we use. And so we can kind of work it backwards pretty quickly once we have an understanding of what cap rates look like. So, yeah, we look at cap rates and typically we want to have a property that is operating north of 10% cap rate. So,
Wow.
if you're looking for simple terms, if you're looking at $1 million property, you want it to kick out 100,000 in net income before paying
Wow.
debt. So that's kind of our minimum. I would say our portfolio as a whole is probably operating around a 12% cap rate.
Wow.
Um, so yeah, and then how we structure financing varies. I mean, we like to hold on to our cash, so we try to be as creative as we possibly can.
Yeah.
And so that's where I really enjoy playing, is just how can we structure something creatively that we have to come with as little cash down. And so I push the banks really, really hard. And so I enjoy giving those guys a hard time to try and give us as much as they can.
Yeah.
But
What do you see? Like, what are some of the bank terms you guys are able to negotiate on some of these things that allow you guys to keep more cash in your pocket?
there's a bunch of factors in that as well. I feel like a broken record saying that, but commercial, the cool thing about commercials is like people get nervous about it, but you can be as creative as you want. And
Yeah.
so every bank's a little different. Like credit unions are different than a small local bank, than a
Mhm.
mid-sized regional bank, and then completely different from the large chain banks like the U.S. banks and Wells Fargo's and stuff. So everyone kind of has a role within the industry, but you're going to probably be the most creative on the smaller local banks, the Bank of
Mhm.
Luxembourg's and uh, uh, Bank of Kakana is one that we've worked with before, and so um, Premier, Lucas over at Premier, I've worked with
Mhm.
before. So yeah, everyone's a little bit different, and every uh, credit company or every credit division for each bank is a little different too.
Yeah.
The board of directors is a little bit different too, and what they're going to allow and approve. So depending on, like, if you get a really good appraisal on the front end, sometimes you can get into the deal with no cash down or
Mhm.
10% cash down. It's not always like, when I first got into the industry, like I didn't know what I didn't know at the time.
Right. Right.
And so I asked people that I knew who were in like mortgage, or who I thought knew a lot about the industry. And early on, everyone said, "Oh, you need 25% down cash, and
Yeah.
there's no ifs, ands, or buts about it. Well, that just so happened to be just that one company who didn't really do much of commercial real estate.
Yeah.
So, yeah, especially if you're a little more seasoned in the industry, like there's a lot that opens up to you.
For
And
sure.
even my first personal deal was an office deal, and I worked with Jake at Bank of Luxembourg on it, and I got into it with the seller paying me to take it over. So that was my very first deal.
Wow. Well, let's break that one down, man. Let's get to that. And I think this is so good because what you just talked about, Mason, for the audience out there, I can't tell you how many times I talk to people who want to get into real estate investing, and that's their realtor told them they need 20 or 25% down if they want to do investment real estate. And that's the only way they can do it. And I can tell you what, I've literally never bought a property with 20 or 25% down. I couldn't tell you, at least of my own money. I maybe borrowed some private money if I needed to for a deal, but 99% of the time, the bank is funding some part of that rehab budget, or the seller's carrying back a piece of it and the bank is funding the other piece. Like, again, like you said, cash is king. And there's lenders out there right now that will do 80% of the after repair value on single family, duplex, 4-unit, whatever, which means like what you're saying, you can give them a scope of work. Here's what I plan to do to the property. They send their appraiser in. Appraiser says, okay, it's going to appraise for $100,000. And the bank goes, okay, great, Corey, we'll give you $80,000 for this project. I'm like, awesome. I'm only buying it for 50. This is great. I got $30,000 from the bank I can play with now to rehab this property, and I still have a $20,000 equity spread. Those are the types of things that I think people who aren't listening to this podcast or aren't educating themselves, they're stuck with somebody who's only knows the traditional way. They're really limiting the amount of growth they can have, because there's no way you guys could get to 9 figures with putting 20 or 25% down on every property.
Right.
You would have to have one heck of a cash machine to be doing that, right? So talk about this deal that you're talking about here, this first one that you got into. Tell us about how you got it. What was the structure? How did that all go?
Yeah, it was office building up in Green Bay, and it was just at the point where I was wanting to do something on my own. So I was a couple years with Caleb here, and buying stuff in his portfolio, and so I found this deal and knew I couldn't put a bunch of cash into it. And his value add, the seller was out of California, and she wasn't maintaining it very well, and try to make it a little bit shorter here, but I knew Bank of Luxembourg had the note, and we know them really, really well and done a lot of business with them. And so I approached them and just said, hey, can I take over the note and take over the property? Because the seller just wanted to basically get out.
Okay.
And so it took them a little bit, but they ended up agreeing to it, allowing me to take it over just on a 1-year term to basically add the value and refinance it. And so I was able to get the seller to give me a credit at closing, and that paid their broker and all the closing costs. And then it gave me, I was going to pull it up, but I forget exactly how much it was. I think I was left over with like $115,000 to basically get tenants in there, rehab it a little bit, and refinance it. So
wow. So this seller wrote a check for like 150 grand to sell her property.
Yep.
Wow. So that was always one of the things I've struggled with, is like, if you're taking over a note and they're not actually getting any cash, how do you get them to give you the seller credit? But she just was motivated, huh?
Well, she was losing money on it every month. And so she just wanted to be done with it.
Wow.
So I was able to negotiate that part of it, and turned it around. And
awesome, dude. So there you go, audience. People will scratch checks to sell properties. Okay, there it is.
Yeah.
We've had that on a few.
No, not super common, but
we've had that once or twice. We had somebody, same thing. She owned a business, and then she had some duplex or something, and I think that was really, really bad, and she needed to get out from underneath it. And like the number that we could give her was like 20 grand less than what she owed. And so, this is just good for you guys out there trying to negotiate some of these things. Never assume just because somebody owes something that you have to bend on your number to try to meet that, right? Like, stick to your due diligence and your underwriting, and your number is your number. And people will bring cash in cases, or they'll figure out a way to get it sold if they want it sold bad enough, right?
Yeah. Motivation's a big factor in everything, right? So you don't ever want to be a motivated seller, but you want
Yeah.
to find the motivated sellers.
That's right.
So,
Yeah, it's right. That's why cash is king, right? Because if you got that cash still, that dry powder still laying around, you can use that
right.
to help out with some of these motivated folks, right?
Yeah,
Yeah,
exactly.
that is awesome, dude. So do you still own this property today, or did you end up refinancing
Yep.
and selling it? Still got
Yep.
it.
Still have it. Yeah, I did. So I did refinance it, added the value, um, refinance it on a longer term note, and still hanging on to it.
Nice. Were you able to pull cash out at the refi as well, or was it just
Uh, Gosh, that's a good question. No, actually, here's what we did. I don't know why I didn't think of this. So I used it and leveraged the equity that we created and bought a smaller um, single tenant retail building. So I
nice?
bought the second building with no cash down as well
So
by
that
using.
yeah, so that second building was because you had forced enough equity that the bank's like, hey, we'll take a second on this in lieu of a down
Correct.
payment over here. So they didn't need cash; they just took a note,
Yep.
basically.
Yep.
So cool,
Exactly.
man. I love that stuff. This is a lot of
Hmm.
people's minds right now, Mason, are blown right now.
Oh boy.
They're like, wait, you can do that? What?
Yeah.
Like I've never heard of that. Yeah, we did something similar. My first 16 unit apartment that I ever bought. I don't remember what I used for leverage, but I had a good amount of equity, maybe in a couple duplexes or something like that. It was the same thing. I was like,
Okay.
how do I get into this with no money to my banker? And the
Hmm.
guy's like, well, do you got equity in something else? I was like, yeah. And he's like, well, we could take a note on those. And I'm like, wait, you just give me a piece of paper that I sign and I don't actually have to bring any cash, like actual cash? He's like, no,
Yeah.
we'll discount it as part of, down payment. I'm like, this is unbelievable.
Hmm.
What in the world? So we got into a 16
That's
unit apartment with no money. It was great.
yeah. That's the power of just getting going.
Yep. You can't do that though unless you got assets to do it, right? And it only took you
Right.
one. It just took you one good deal that you did it right
Hmm.
and forced the appreciation and bada boom, bada bang. It parlayed
Yep.
that, monopolied that right into another one, man.
Yep.
That's so cool, dude. I love that stuff. Let's break down a couple other deals. You sent me over your
Hmm.
your best deal you guys have ever done, and that was an office building in Hudson. So tell me a little bit about
Yeah.
that one.
Yeah. So, like I mentioned earlier, we have kind of adjusted the business just over time, right? So at
Mhm.
one point, a big push that Caleb was trying to make is we wanted a lot of brokerage offices.
Okay.
So we had bought one over in Eden Prairie, Minnesota. Eau Claire, we had one, and so we kind of expanded where we're looking for buildings. Hudson's on kind of that part of the state, the western part of the
Mhm.
state. Found a really good deal on an office building there, and Keller Williams agent. I think he was just occupying space there for another one of his businesses, and so we basically negotiated it and didn't. We got into it and didn't really do too much to it. Um, and we had the other cool thing about commercial is there's private equity companies out there that basically have money to spend, so they're motivated buyers, and so handful of months into the owning of the property, just were reached out by one of these large companies that needed to place some capital, and yeah, I mean the rest is history. But this one, I mean, our holding period was like 8 or 9 months, and I mean we almost doubled the price that we paid for that property without
Wow.
having to really do too much to it.
Wow, that's awesome, dude. It just
So it
that
just kind of
you guys weren't shopping. They just approached you out of the blue.
mm-hmm. Yeah,
Amazing.
exactly. So
Wow. So that gives you some more dry powder then, right? To go put into some of these other acquisitions
yep.
and refinance back out, pull that dry
Mm-hmm.
powder back out, go do it again, right?
Yeah, yeah. So that one was, I mean, financially definitely our best deal based on the holding time.
Yeah.
But it was just one of those things, kind of right place, right time, and
Yeah.
ended up working out.
Hard to replicate that over and over again, right?
It is, yeah, yeah, and yeah, we don't for our office and retail stuff, we don't typically plan to exit them. We plan to hold them long term, but the only time we ever will sell something like that is if we just get an offer that we wouldn't be able to get in another 10 years from appreciation, or
For sure.
so yeah, that's the only time we typically will exit our long-term holds like that.
Nice. Awesome, man. That's a good one, dude. Let's talk about your favorite deal. So this was a new office acquisition in 2025. Tell us about this one.
Yeah, this was our Packerland deal, the one on
Yeah.
3500 Packerland. So we uh, huge building, 150,000 square feet, was occupied by American Family Insurances. It was one of their,
Oh, yeah. I know
yeah,
exactly
one
where
of,
this is. Yep.
yep, by the hockey rink over there in the
Yep.
Schwaben field. So
Yep.
they they weren't renewing their lease. It was owned by a large REIT, real estate investment trust, out of Phoenix,
Okay.
and so they had occupied the whole building as one of their other main data hubs outside of their headquarters in Madison. So huge data center in it, and the REIT brought it to market. And the IFF really had it for sale. We know them really, really well, so we just kind of got talking to them, and they just said they're guiding the price around. I'll use real numbers. It was around 17 million, which was what it was assessed per the municipality.
Okay.
So, like, well, we're not going to buy 150,000 square feet vacant office for 17 million, and so we ended up just going into it and said, okay, we'll pay $2 million for it,
Two
and
million.
$2 million, yeah. So they countered back, and I think they came down to 3.5 million right off the
What?
bat.
What?
Yeah. So at that point, we're like, okay, we know they're motivated. So we came up a little bit. So we paid 2.5 million cash, and they ended up taking it, and we were able to take it over. And yeah, so
Wow.
yeah,
Dude, that's incredible. Oh my
yeah. So
gosh. Okay, so when was this? This was last year?
this was January of 25. Yep.
Okay,
Yep.
so it's about over a little over a year now you guys have had this thing. Okay.
Correct. Yep.
And now
Yeah.
is this
So
only for what's all in the building now? Is it just KW office or what's in there now?
yeah. So that's a good question. So we ended up moving our office there, Park Place Holdings. So
Okay.
before we were at our Eisenhower building, just kind of commingled with Keller Williams at the time.
Oh,
And so we ended up putting our office there, building out a very nice space that Caleb designed. Uh, and then Keller Williams has now since followed, and I don't think they're not quite in there yet, but their build out is done, and so they're going to be in the building as well. We got a couple other tenants, but the bigger part of the story there is the church that Caleb goes to, Destiny Church. At the same time, they were kind of looking for or looking to do an addition onto their building.
yeah.
And so we just he started the conversation with them. It was like, well, why don't we just give you 50,000 square feet is what they're looking for. So we'll give you guys 50,000 square feet for the same price per square foot that we bought the building for. And so we ended up condoing it off. And so of that $2.5 million purchase price, we were able to recoup half of that from condoing it and essentially giving it to the church to build out their space on the first floor. And then they're also running a coffee shop. And it'll turn into additional like breakfast and lunch items and stuff like that as
Yeah.
well. But
Yeah.
they're running the coffee shop out of the building on the first floor as well. So
Wow, dude, that is awesome. So
yeah,
what do you think? So you got what, about 1.3-ish million back, was it? 1.
yeah. It was a little bit less than that. I think it ended up just being under $1 million.
Okay.
But yeah, so it
So
reduced our obviously holding costs on that property
for sure.
significantly.
What do you think now, Mason, with what it is? So let's say you're all into this thing for 2 million bucks or whatever it is, just rough numbers here.
Mhm.
What do you think the value on this thing's going to be once you're fully leased up there?
Yeah, it should be right around that, probably 10 to 12 million number for the rest of our condo portion. Yeah, when we bought it,
Oh
it
my goodness.
appraised. Yeah, so we offered the 2.5, which was accepted, and then our appraisal was at I think 9.5 million as is. So yeah, there's quite a bit of spread there, but
Wow. This is
mhm,
why you do commercial. The numbers are just
yeah,
so much bigger, dude. Unbelievable. So you
yeah.
could
I mean,
refinance that sucker even with at 60% LTV and you're pulling out $4 million tax free.
right, yeah, and we did some of that. And we've used that to do some build outs and stuff in the building, but you're using the equity to pay for it, and then you get it back in cash flow, right? But yeah, the tough part, so deals like that, we're buying it vacant, and you have to be able to support the holding costs on it because I mean
Mhm.
we were eating probably $40,000 a month, just holding it, trying to get people into the building,
For sure.
and so yeah, slowly but surely we've been able to reduce that. And I think we're positive cash flow now with our last couple leases signed. So
Dang, dude, that is so cool. If I had my little bell over here, I would be ringing that bell for that deal. That's amazing, man.
yeah, but it's one of those deals. It's partly my favorite because of how we negotiated it, but it's just one that we learned a ton on because it's a building. We've bought a couple things that are that size.
Yeah.
We did the redevelopment of the office building in Neenah to 55 plus, so that one is about 150,000 square feet as well. But
Okay.
yeah, it's just one of those buildings where you just learn a lot about. It's a lot different than a 10, 15, 20,000 square foot retail building where you have multiple shops in it. Like this is a whole nother game, just building and how to work with it. And so
Wow, dude, that's incredible though. I mean, okay, there's a lot of lessons in that deal right there, Mason. But audience, did you hear this? Their number they just threw out there. Could you imagine the balls it takes to go? You want 17 mil? How about 2? And then they don't say no. I mean, that's amazing. Like you don't know. I know one of the guys in the mastermind group that I'm in. He always shares this story of somebody who bought. I don't remember what it was. It was some building, massive building in either Detroit or New York or something like that. They had it listed for like 200 million, and he offered him something like 10 million for it or something. And he ended up getting it.
Yeah,
and it's similar numbers there in a sense, right? With the spread, you just don't know unless you offer, right?
Yeah, and this one specifically, like we knew the REIT. We're familiar with the REIT, and we knew that they don't like to hold assets and try to redevelop them or try to release them. They'd rather just dump it and move on. And so that played a little bit of a role in it. But yeah, at the end of the day, like you have your buy box, right? You stick to what you know, stick to what you do, and it's just a numbers game from there. Like
for sure.
We always try to lead with, we're not trying to offend you with a low offer. This is just what meets our criteria. Here it is. Take it, leave it, or counter it, and good things happen. So
that's incredible, dude. So what do you think, all this build out and stuff like that, Mason? Because I have no idea what build out on commercial stuff is. What do you think the overall cost for you guys to do the build outs for all the tenants? And then with the tenants that you're leasing to, if you're building out, like, so for Keller Williams, I know it's kind of different because it's still Caleb, but are you charging that person the build out, or are you just baking that into a higher lease for the build out, or how do you guys typically structure that?
Each one's a little different. So we typically try to figure out what payment tenants want to be at. Okay. And then we structure it around that. So if they want to have a little bit lower payment and they want this expensive build out, well, then they're either going to have to cover it or bring some cash down to pay for some of it. So we're not out of pocket for the whole thing and getting a low rent payment.
Okay.
Keller Williams is a little bit different since Kim owns it, but so like we are covering pretty much their entire build out. And then it just gets baked into the lease rate. So we just run an analysis on the costs to put into it, and then what we need to see for a lease rate to kick back out to us.
Cool.
So each is a little bit different, though. Some are more expensive, and some are significantly less. So
okay. Wow. Well, man, this is awesome stuff, dude. My mind is blown. I hope everybody out there listening, their mind is blown, and the wheels are probably turning for a lot of people like they are for me right now. I got to come sit with you guys and just be an intern for a while over at Park Place and learn this commercial game a little bit.
For sure.
Well, awesome, dude. One last question we always ask everybody. This is kind of a fun question. Why we ask this, we have people out of Wisconsin that are thinking about investing in Wisconsin. Do you have a favorite Wisconsin tradition or place that you like to visit, Mason?
Oh, geez. Yeah. The tough part about being up here, so I'm originally from Iowa. So I grew up in Iowa. So I'm not originally from Wisconsin. And I think the tough part now being from Northeast Wisconsin is that you get so used to Lambeau Field. You get so used to, Camp Randall and what was Miller Park. And so for me growing up, those were my favorite traditions because I wasn't up here.
Sure.
And then you come to spring training for football and baseball and go to the tailgate at Miller Park and stuff. And so growing up, I would say those are my favorite things to do.
Nice.
But now that we're up here, or that I'm up here, and we have our family, I would say it's probably just getting up north, going out on the lake with the kids, enjoying the boats, and we're blessed with my wife's family and having a lake house up there, so we get to spend a lot of time up there. And I think the other thing too, supper clubs. Like we some in Iowa, but never really grew up with it.
Yeah.
And as we get a little bit older, just enjoy supper clubs and some old
Yeah.
fashions and a good
Yeah.
Friday fish. So
Yeah.
yeah, I would say that's probably it.
They age well. The older you get and the grayer
Mm-hmm.
your hair gets, the more you find your home at supper clubs, I think. I think
Yeah.
it's just a thing. Yeah, for sure. That's awesome, dude. Well, dude, this has been great. If anybody wants to reach out to you, Mason, maybe they got a deal, a commercial deal that they
Mm-hmm.
want to partner with you on or send your way to buy or whatever, or they just
Yep.
want to, chat with you, what's the best way for somebody to get in contact with you, man?
Yeah, I would say email's probably the best.
Okay.
I can give it to you, or if you want to put it
Yeah.
in the video, I guess I'm not sure what.
Yeah, you can throw it out there and we'll add it to the show notes and stuff.
Okay, yeah. So it's Mason at parkplace-holdings.com.
Perfect. Awesome, dude. This has been great, dude. I appreciate you taking some time out of here. I mean, you're literally profit per hour. You're a very expensive man to get on here. So we're taking you away from, dude. I really do appreciate it. For those of you guys listening to this, if you got some value out of this, please share this episode. It helps us grow the audience, helps us grow and get awesome people like Mason on the podcast. And anybody out there that's looking for an opportunity in real estate, if they don't want to go talk to Mason about what he's doing, we are hiring right now. So we are hiring an inside salesperson, and we have 2 openings for somebody in Madison to run our acquisitions as we expand to Madison. So if you are anybody out there is interested in getting into the acquisition side of things and they're in the Madison area or want to be in the Madison area, please reach out to me directly, Corey at ibuywi.com, or you can go on wisconsindiscountproperties.com and just put some information on the contact page. And we'd love to have a chat with them and see if they'd be a great fit to join this team. With that, Mason, any final words for the audience, brother?
No, I appreciate the time, and biggest thing I think I said is just got to get going, got to get started somewhere, and first deal is always the hardest.
Yeah, 100%. It doesn't have to be 150,000 square foot vacant office building, folks. Okay. You can start small, work your way up there. All right. Don't
There
get
you
the
go.
big, don't get derailed if you're having success right now either. Okay. This is not one of those, but no, this has been great, man. I appreciate you being on. Thanks to all you guys for listening, and we'll see you on the next episode.